So we're sitting here in December of 2024. As always, people start to look at their portfolios and look for opportunities as you head into the next year. And really, we talk about the importance of active management when you're managing your money. Austin, as you looked at things heading into 2025, what should an active manager be looking at?
I think there's a ton of things that active managers need to be focused on. And the environment's changing. And I think it's something that most people don't appreciate. If you look at an active manager who's been in the business for 20 or 30 years, they're likely operating in an old fashioned framework where they essentially just go buy stocks and they wait for them to hit their valuation. Buffett used to talk about this a lot back in the 80s and 90s. He isn't necessarily executing on that same approach today. And so people should be more aware of how the market's changing around them. Some of the awareness right now needs to be, hey, from an active perspective, maybe I don't own these companies that everyone thinks is going to take over the world. And maybe I focus on some other fundamentally advantaged companies that we can buy at a significant discount to market prices. And so one of the things we've seen as people kind of rush into indexing is you have these 7 companies who have elevated the valuation of the overall index, even though they don't have growth that's all that much greater than the broader index. So I think people should look underneath the surface and say, hey, where can I get some incremental growth from a fundamentally advantaged business and get it at a reasonable price? And they'll likely outperform going forward.
Adam, same question to you, but I'd love an international lens and your thoughts around active management.
Yeah, I guess I'll answer that in a couple of ways. One, I think when you roll into anytime you're at year end and the market's at an all-time high, you want to take a hard look at your portfolio. Hopefully you've done well because the market's up. If you've lagged, try to understand why you've lagged, but don't necessarily chase it, because the reason you've lagged could very well be the reason that the market valuation is stretched. And I think there's an argument that you could make today around that. And then look at like what hasn't done as well, and should you be diversifying? And I think when you look at certain international markets, and then the charts or the table that we showed earlier, there's some big opportunities internationally at much more reasonable valuations. And despite all the political rhetoric, despite everything going on, we're still living in a global economy. That's not going to change. And to be able it's a good time, especially if you've done well, to sort of add some additional diversification to your portfolio. And a great layer to add if you don't have it is an international approach or a global approach. And odds are you don't. Odds are most people, most American-based, U.S.-based investors, odds are you do not have enough international exposure in your portfolio. So I would take a long, hard look at that and consider how much you might want to allocate, and it could be a good place to go. And just ask yourself, look, the market at an all-time high is not in and of itself a sell signal, but it's how are you going to feel if it goes down 20%? Are you going to feel stupid if you haven't done anything? Is there something you can do proactively to make sure that you'll feel smart? So those are the things I would consider, and I think international should be a big piece of any thought process around how to play or how to manage a portfolio in 2025.